bring on board Renu Beth Pugalia, analyst IFL Capital, joining us this morning to give us a sense of how she's viewing some of the developments here. Renu, how positive and who will be the key beneficiaries to this? Of course, EMS as a whole, but there will likely be certain companies within that pack which will disproportionately benefit from this.
So clearly, I think if we look at partnering with Chinese OEM as well as the component manufacturers within the EMS, Dixon has been the flagship name. They have been working over the last 1.5 years to form various JVs, make smaller acquisitions, and various of their JVs were in pipeline awaiting PN3 approvals. So which is where we think Dixon is the key beneficiary. Earlier, they first received the approval for the HKC JV, which is for the display module assembly, which itself is a big positive. And thereafter, later when this amendment on the press note 3 came in through, so that was very critical because its JV with Vivo has been in pipeline for almost 6 months. It has been delayed for almost a long time. And this announcement definitely improves visibility on the volume growth within the smartphone manufacturing space in India. So while the company was in the challenging environment where memory prices have been very sticky, they were gunning to broadly retain the volumes. Definitely, this is a big positive as Vivo volumes come in. We see volume growth coming back for Dixon from fiscal 27-28. Factories are almost ready, and numbers will start to accrue positively on that side. So with a lag of a quarter, they should be broadly ready to launch their products in the market.
How do you see margins impacting for Dixon? Do you see margins expanding because of this JV cost and synergies and everything coming in?
So the margin expansion story will take time. Definitely components as an ecosystem carries typically high single digit to double digit margins. It will improve the overall profitability. But this has to be seen in a holistic manner because if we look, fiscal 26 was the last year for the PLI incentives for smartphones. So to that extent, while these benefits will start to accrue from second half of 27, fully in fiscal 28, in the near term, there could be some headwinds on the margin front. But we think overall, the savings from the component ecosystem and the backward integration which Dixon is doing will help them to broadly retain the margins as well as retain customer clients in this space over the next 12-24 months. And hopefully over a longer term period, we see margins relatively improving in the mobile phones with the stickiness coming through. But the entire margin accretion will take slightly longer, though components in itself carry better margin mix along with government subsidies and ROEs coming on that side.
But Renu, how material could this move really be? I mean, with the easing now in place, could you really see a barrage of, JVs, tech partnerships, investments, etc., coming in from China?
So there have been these projects in pipeline. It's just the government approval process was relatively slower. So yes, the EMS, the electronic space tends to benefit, but our sense is that these JVs could not be just restricted to the electronics. Even other sectors, for example, on the grid equipment side, on the power segment, there were a few opportunities in the past, but they did not go through. And now if the JV approval process is eased out with Chinese players, so we could see these JVs coming in shape in the power equipment market, be it GIS or other products with Indian counterparts.
Yeah, how big is that, Renu? Because what that will do is it'll accelerate a shift away from China. That's one, but it also gives China a foothold into Indian manufacturing. I'm trying to understand, does this place Indian manufacturers in a much better position profitability-wise, not just EMS, but even within the cap goods and power space?
Not really, I would say, because see, across, if you do X of electronics or EMS, government has been very clear that they prefer localization and domestic manufacturing. But on various product segments and few of the categories, there have been technology gaps which the domestic companies have. While we have MNCs being present in India through their wholly owned subsidiaries, but not all of them are able to meet fully the requirements. And there's always a need to have higher competition or more supplies from other alternate domestic vendors. So for example, if you look at the T&D or the grid equipment space, the top 3 MNCs have all the portfolio and technologies. But the rest of the domestic companies, the spread of technologies in, say, for example, 765 kV GIS or other high voltage DC solutions is relatively thin. So access to these JVs or relatively ease in approvals to the JVs will ensure that some of the Chinese vendors who were earlier present in the country during the last decade, but they were forced to move out after the Galwan clash, they may see their entry back in the market through JV and approval route. But the manufacturing and the majority ownership here will continue to be with the domestic companies. So from a longer term perspective, we think it's a win-win. Indian manufacturers definitely will benefit because all make in India coming in from the local market. And Chinese equipment suppliers also who are willing to part with the technology find access to the market and access to exports from India.
So this is not like a blanket, approval which is coming in, right? In that sense, the Indian company will have to justify the need for a JV for a particular technology in a particular sector, and the government will then have a look at it and approve or disapprove within 60 days.
Absolutely. So it's a full process. It's not that the gates have been opened and market will be flooded with Chinese JVs or partnerships. But it is wherever there is a case-to-case requirement of adding value to the domestic ecosystem and government's broad-based requirements of localization across sectors will come through. So it's a process which is where I said it will take a couple of months and as on a case-to-case basis, we'll get to approvals. But the PN3 process, which itself was fairly cumbersome and long drawn, that requirement will definitely ease.
So Renu, that obviously brings us to what's in it for investors. What's your preferred list within the EMS plays?
So clearly with these JVs and ease in government requirements, we think Dixon Technologies, which had corrected quite sharply, stock had not only derated, but there was a overhang on the potential risk to business volumes if the Vivo JV slips through. And I think with these approvals, those overhang concerns should gradually be addressed in the next couple of weeks or so. And we think the stock is due for some re-rating here. So that definitely turns out to be a pretty attractive bet. The rest companies that we preferred in the EMS has been Keynes. Stock has been doing well, and it's more of a gradual improvement till you see improvement in the working capital and balance sheet towards the end of the quarter, which comes through.
Okay, Renu, great to have you on the show today, and thanks for bringing into a perspective and insight, what this news really means for the entire sector.